Good evening, everyone. Tonight we'll be breaking down what's really happening inside of Donald Trump's economy. As you can see on Friday, the unemployment rate fell to 3.5%, and the jobs report came out, and we created over 260,000 jobs. But when you actually pick apart the data and you dive a little bit deeper, you'll begin to see that this is all fluff and we are living in a bubble, and there are some serious problems with the economy. Give me 1 second, I have a loop. So there's some serious problems with this economy, and I'm going to break it down for you. It's going to be a technical show today, so bear with me. I'm going to try to keep this around 25 to 35 minutes because I'll be over the next 2, 3, 4 weeks really diving into the data and really connecting the dots as to what's going on. But I encourage a lot of you to go out and read this book, 1984 by George Orwell, because we're witnessing it, we're living it right now, where the media and corporations and politicians are colluding with each other, and they're just flat out lying and being disingenuous. So we're going to give it about another 2 minutes as usual. Let more people come into the stream. As you come into the stream, if you're not subscribed to my channel, please hit the subscribe button as well as the notification bell so you can be notified in the future. Also, like this video as you come in, or dislike this video. It doesn't matter either way. Also, if you want to follow me on my other social media platforms, such as Twitter and Instagram, the link will be below. If you want to reach out and contact me, my email is in the description. If you want to support the channel and support the content, my CashApp and PayPal is in the description as well. You do not have to donate. Simply by liking this video and sharing this video is good enough if you cannot afford to donate. So again, we're going to give it about another minute or two. You can shout out where you're watching the stream from. Let's look at the chat and see what's going on. Thank you for this information. Those job numbers are smoke and mirrors. Most of them are low wage. Yes, and many of them are not even new jobs created, and I'm going to really break that down. How you doing, Linda Humphrey? Props from the West Coast. How's it going, Golden Gate? So again, just time it. All right, so we'll give it about another minute, and then we'll get ready to get started. So it's good to see. Okay, so we have 64 people watching. Okay, DC's in the building. That's good to see. Somebody just followed me. That's good. Raleigh, North Carolina. How's it going? Baby Boyce with the data. Yeah, don't worry. We're not going to sit up here and talk about Popeye's chicken. We're really going to get into the information as usual. I was saying that while watching Bloomberg TV. Absolutely. Atlanta checking in. That's good to see. New to your channel, Missouri. Thanks for the subscription. Jackie Chambers. And we have 79. Brooklyn Cooley, San Diego. Okay. So, as usual, I want to give you the introduction. And I want to first start off by saying that I'm not making this video because I'm a social justice warrior. I'm not a Democrat and I'm not a Republican. I'm an independent. I have conservative ideals and I have some libertarian ideals. But I'm not one of these people who I'm a never Trumper. And I'm not making this video because I'm telling you that you should or should not support Donald Trump. I'm simply making this video to inform you. Many of you know where I stand when it comes to both the Democrat Party and the Republican Party. It's just the left and right wing of the same bird. Conservatives and Republicans, they claim to be fiscally conservative, but we just seen Trump blow a hole in the budget. He's increasing the deficit. He just did a $1.5 trillion tax cut. Democrats, on the other end, they believe in, just spend. But as I'm going to detail and show you, once we delinked from the gold standard, the deficit and the debt has done nothing but increase over the years. So there's clearly a problem here where we've had both Republican presidents. We had the first Bush. We had the second Bush. We've had Democrat presidents. We had Obama. We've had Clinton. And the debt continuously keeps rising over and over again. And whether it's a Republican or whether it's a Democrat, none of them are being fiscally conservative when it comes to money. Also, what we're beginning to see is that once we delinked from the gold standard since 1971, we've been practicing this idea of trickle-down economics. And we know, based upon the data that I'm going to show you, trickle-down economics isn't benefiting 90% of the population. It's benefiting the top 10% and above. That's a problem. And what's happening is you have corporations, big business, colluding with government to extract and suck out resources from the economy, and they're not giving it back to the everyday people. And people like Trump, who they believe that if we just cut taxes for the rich, they're going to somehow take that money and reinvest back into people. And as I'm going to show you with the data, that's not happening. So as I've said time and time again, the Republican Party and the Democrat Party is just the left wing and the right wing of the same bird. A rising stock market is not a healthy economy. And let me just briefly explain to you why. You cannot value your wealth and health of your economy because paper assets are rising. Because we know that the Fed, by keeping interest rates low, by going into the repo markets and buying up toxic assets, by doing quantitative easing, if you look at TARP, if you look at TALF, they're intervening into the market. And then what's happening is that these corporations, when they get these tax breaks, instead of investing in equipment and employees, they're buying back their stock. So interest rates are cheap, companies are taking on more debt, and then they're using the tax breaks to go and buy back stock. That doesn't benefit you nor I, because just like the stock market's at 26, 27, 28,000, next year, if the Fed doesn't keep feeding this bubble, that same economy that's thriving, that you think is thriving because the stock market is going up, it's going to come back right down and collapse. So I want to make that very clear, that this is not about partisan politics. This is about the information and the data. Now, with that being said, I want to play a clip from when Donald Trump was on the campaign trail and he was debating, let me make sure the audio is okay, 1 second, when he was debating Hillary Clinton. Because, see, this is extremely important. You're going to see the hypocrisy here. Donald Trump called the stock market a bubble during the debate. It was September 26, 2016. I'm going to put the link in the chat because I believe in you taking me up on my word and going and doing the research yourself. So now let's listen to this.
For people at the very top.
Mr. Trump,
typical politician, all talk, no action. Sounds good, doesn't work, never going to happen. Our country is suffering because people like Secretary Clinton have made such bad decisions in terms of our jobs and in terms of what's going on. Now, look, we have the worst revival of an economy since the Great Depression. And believe me, we're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful. And we have a Fed that's doing political things. This Janet Yellen of the Fed. The Fed is doing political by keeping the interest rates at this level. And believe me, the day Obama goes off and he leaves and he goes out to the golf course for the rest of his life to play golf, when they raise interest rates, you're going to see some very bad things happen because the Fed is not doing their job. The Fed is being more political than...
So understand, this was back in September 26, 2016, where he was talking about the Fed creating a bubble in the stock market and talking about if interest rates rise, the stock market is going to come down. Now, I'm going to lay this out with his own words. Now, when he was campaigning, he was against the Fed. He was against low interest rates. He was for the American worker. And see, you got to understand, this is what is known as tricknology and politics. Not politics, but politricks. See, Trump is very disingenuous when he speaks because he'll say one thing today, and then next week he'll say another thing. Now, understand, I'm going to play this clip now. This clip is from July 5th, 2019. It's a little hard to hear because there's a plane in the background. But listen to what he says now, 3 years later, about the Fed.
So we're very happy about it. I think we're going to We're going to be breaking records. If we had a Fed that would lower interest rates, we'd be like a rocket ship. But we're paying a lot of interest, and it's unnecessary. But we don't have a Fed that knows what they're doing, so it's one of those little things. But if we had a Fed that would lower rates, you would have a rocket ship.
All right, so we've got Tim Anderson with us from TJM.
So understand right there, he's talking about lowering interest rates. Now I'm going to pull up another clip where it's a little bit clearer. Just give me 1 second. Where he's talking about the interest rates. Federal Reserve, give me 1 second. So you can see this is hypocrisy because he's calling the stock market a bubble when he's campaigning, but now it's not a bubble.
Despite a near record number of rate increases and quantitative tightening by the Federal Reserve since I won the election, 8 increases in total, which were, in my opinion, far too fast an increase and far too slow a decrease. Because remember, we are actively competing with nations who openly cut interest rates so that now many are actually getting paid when they pay.
So, as we can see, Trump on the campaign trail, stock market's a bubble. Interest rates are too low. Donald Trump, the president, now all of a sudden, he wants to lower rates. He wants to go to zero rates. The stock market is basically his beacon of a successful presidency. So we can clearly see hypocrisy. Now, what I want to do is I want to flip this over because, see, this right here is the Federal Reserve Bank of New York. And this is the repo operations that's happening on a daily basis. Essentially, what the Fed is doing is that they are printing close to 70 to 80 billion dollars every day and going into the market and basically loaning this money to other banks or taking their toxic assets or their mortgage-backed securities, whatever the case may be. And don't worry, we're going to dive a lot deeper into the repo and reverse repo operations. But this is essentially the Fed printing money and going into the market. So they're increasing the money supply. So our stock market isn't up because the economy is healthy. It's because the Fed is manipulating interest rates and manipulating the market. So as we can see, it says billion. Almost every day, the Fed is going into the market and purchasing close to 70 to 80 billion dollars worth of securities. As you can see here, Friday, December 6, 2019, the total $72.8 billion. We come down here, the 5th, 2019, which is Thursday, $78.7 billion, right? This is just the repo operations. We're not even talking about the QEs that they've done in the past, talking about doing QE4, QE5, and this is just the Fed here in the States. So if our economy was doing so well and our banking system has all of this liquidity, why do they need to print $78 billion every day so that banks can do day-to-day operations? Now understand, they're not doing this, they're not taking this money and loaning this money out to people like you and I to grow the economy. They're giving this money to speculators, to investment banks, to hedge funds, to go out and do their day-to-day operations and speculate in the stock market. So this is not a healthy stock market. And I want to make that very clear. And I'm going to post that so that you can go and follow up behind me and do your own due diligence. Now, the next thing I want to show you is the unemployment rate, because you constantly keep hearing him talk about the unemployment rate. The unemployment rate is going down. When you look at the data, you cannot look at the unemployment rate and attribute that to Donald Trump and his policies. Because see, if you zoom in, and this is a really important site. This is Fred, right? This is the Federal Reserve Bank of St. Louis. So I'm not just pulling this data out of anywhere. This is data that you can go and validate yourself. If you zoom in and we come here to, let's start from 2005 and we look at the unemployment rate. In 2008, that was the Great Recession, right? So now we have Barack Obama as the president. The unemployment rate spikes, and then Obama and the Fed, They throw everything at the economy. TARP, TALF, cash flow clunkers, the stimulus packages, all of those different things. Print billions and trillions of dollars. And guess what happens? From 2010 up into 2016, the unemployment rate falls. So one can lead to the conclusion that the unemployment rate was already going down based upon what Obama was doing. So you can't sit up here and say, well, Trump's policies are making the unemployment rate go down, because the trend was already heading down since 2010. So when you look at this, take away your biasness and take away your partisan politics, the unemployment rate was already falling. So it doesn't make any sense to sit up here and go, oh, Trump is the reason why the unemployment rate is so low. It was already falling because of the Fed printing so much money and because of the government doing what they did as far as all of the different stimulus packages. Also, you can look at GDP, gross domestic product. And for those of you who do not know what this is, I get it. I'm not trying to belittle you. I'm going to give you the definition. Gross domestic product is the monetary value of all finished goods and services made within a country during a specific period. GDP provides an economic snapshot of the country used to estimate the size of an economy and the growth rate. GDP can be calculated in three ways: using expenditures, production, and income. Well, if we look from the Obama era to the Trump era, do we see this massive expansion in GDP? Or do we just see more of the same? So again, for him to say that he's going to roll back regulations and he's going to give tax cuts to the rich and that this is going to spur growth and economic activity. But when we look at the data from 2016, it's flat. 2.2 in Q3, 2016, 2.0 in 2016 Q4, 2.3. We peaked at 3.5 and then we went down. Peaked at 3.5 and then we went down. More QE, interest rates get cut. Okay, we spike back up, and look, we're headed back down. We're at 2% now. So you can see if you go back to the Obama presidency, it's just more of the same. There's not this robust economy that's happening. It's just not. Now, I want to show you something, because this right here is extremely important, and this goes back to George Orwell. So now the jobs data comes out. The champion that we created 266,000 jobs. And then out of the next breath, they say 48,000 of those jobs weren't new jobs. They were just the General Motors workers who were on strike last month coming back to work. So now Trump and his cronies, they're running around saying that, oh my God, we created 54,000 manufacturing jobs. That's a lie. It's technically true as far as the workers coming back. So the number, the way they calculate it, it says we created 54,000 manufacturing jobs. But those jobs already existed. It was just the people who were on strike coming back to work. And the media, the fake news, and it's funny how Trump always talks about fake news, but when it's beneficial to him, he likes it. I want you to listen to what they have to say, because they're basically admitting it to you in your face, but they don't believe that you're intelligent enough to catch it. So I'm going to play it for you right now.
Look at manufacturing. That's almost entirely GM and a little bit more. All those people coming back from that GM strike. So that's pushing that number up. It's still this very, very low 50-year level. A couple of generations of people have not seen.
Give me 1 second. It's buffering. Let's refresh it. Let's click play.
Jobs report, and it is
in the fall than we had been hearing from some of the other kinds of data that we watch here. So companies are hiring and been hiring at a pretty brisk pace this fall. The unemployment rate fell to 3.5%. That is still this very, very low 50-year level. A couple of generations of people have not seen this kind of unemployment rate, and it continues to be that low. So where are the hiring? Where is the hiring? Look at manufacturing. That's almost entirely GM and a little bit more. All those people coming back from that GM strike. So that's pushing that number up. But across the board in healthcare.
So did you hear what she just said? Across the board, if you look at the manufacturing numbers, 48,000 of those jobs are not new jobs. Those were existing jobs, and all that happened was the employees that were on strike came back to work. But now Trump and Jim Jordan, they tweet out 54K in manufacturing. And then you have the Brexit crowd. You have the Candace Owens, the Anthony Bryan Logans, the Brandon Tatums of the world running around talking about the economy is doing so well. Look at all of those manufacturing jobs. And why am I highlighting manufacturing? Because Trump campaigned off the idea and off the promise that he was going to bring manufacturing jobs back to America. I just proved to you, not only is he not bringing jobs back, but the manufacturing sector is in a recession. And I want to read something to you real quick, and I'm going to put this in the chat so you can go behind me and read this stuff as well. Give me 1 second. Let's paste this so you can go. I want to read this, and I highlighted it for you. Let me zoom in so I can read it for you. It says, business in the U.S. hired 266,000 people in November. Now, remember, I just told you over 40,000 of those jobs were just GM workers coming back. Listen to this paragraph. The impressive number got a bit of an artificial boost from the end of the General Motors strike by auto workers, which added more than 40,000 workers onto the payrolls who had been missing in October's jobs figure. But even without the boost, major industries like healthcare, professional and technical services, and leisure and hospitality all grew robustly in November. So see, that's called double speak. That's called talking out of the left and right side of your mouth at the same time. He's tweeting out 54K in manufacturing. You have to understand, if you strip out the workers coming back to work, that means that if you subtract 48,000 from 54, the net gain is only 6,000. See, Trump has mastered tricknology and politricks, where now you have his cronies, the Brandon Tatums, the Candace Owens, talking about, look at these manufacturing jobs, but they're not growing. And I want to show you something, what's happening in the manufacturing sector, right? It says right here, manufacturing is now officially in recession, despite Trump's vow to boost industry. See, this is important. This is from October 11th, 2009. This is the Los Angeles Times. It says, during President Trump's first 2 years in office, his standing with many voters was buoyed by a surge in manufacturing that helped create millions of jobs and undergirded the whole U.S. economy. But today, manufacturing has plunged into recession and is threatening to pull down other sectors, perhaps hitting hardest on supporters in those states that helped put Trump in office. As measured by the Federal Reserve, manufacturing output shrank over 2 straight quarters. That's the common definition of recession. So understand that I'm not making this up and I'm not guessing. When he's talking about a thriving economy, he's being disingenuous and he's playing on numbers. And see, when I was in college, I learned when I got into statistics that there's a difference between causation and correlation. So when you really start looking at this data, we're not creating new jobs. That 54K in manufacturing is not new jobs. That's just workers coming off of strike. But he'll go out here and he'll tweet and say the economy's doing well. I just showed you how the Fed is going into the market and basically pumping liquidity. When they say pumping liquidity, that means printing money, giving it to banks to go buy stocks. So a rising stock market isn't indicative of a healthy economy. The whole idea of trickle-down economics, it's not working. And I'm proving that to you with the data. Now, going back to what I talked about earlier, when you look at when we delinked from the gold standard, what it allowed countries to do and what it allowed the Fed to do is it simply just allowed the Fed to go out and print as much money, and it wasn't constrained by as much gold your country had. So now you can go and do deficit spending to the eye, as far as the eye can see. This is the debt clock. This is extremely important. The U.S. national debt, as you can see, these numbers, they keep going up. It's at $23 trillion right now. And I'm going to take this and, again, post this in the chat so you guys can go and see this. We are never going to pay off this debt. Now, why is this important? Because something happened after 1971. And I'm going to show you exactly what happened. And I want to do this so that you can understand that this is not about attacking any particular political party, but this is about informing you with the data. We're looking at the federal surplus and deficit. After 1971, when we delinked from the gold standard, you can see the deficit begin to start to slowly increase, right? You can see it. You can see it. And then what happens? We get a dot-com bubble. See, this is important to understand. We get a dot-com bubble. Let's zoom in so we can see this more. Let's get right before 1970. As you can see, the deficit's increasing, And then what happens in the 90s? We get the dot-com bubble. And what begins to happen? Because we're in a bubble, right? More tax receipts is coming in. We're not in a deficit anymore. Because all a deficit simply means is that, okay, you bring in $1 trillion worth of tax receipts, but you spent 1.5 trillion. So your deficit in that fiscal year is going to be 500 billion, right? Because you're just subtracting, your tax expenditures from the amount of money that you spent. But because we were in a bubble in the 90s, look, we balanced the budget. And then guess what happened in 2000? The bubble burst. And when the bubble burst, guess what happened? All of that cheap, funny money that the Fed was pumping into the stock market back during the dot-com bubble, it burst, and look what happened. The deficit came right back down. We got a little bit of a recovery. Oh, guess what this was? This recovery was a what? The real estate bubble from 2004, 2005, 2006, 2007, and then boom, we fall off a cliff to $1.4 trillion. And then guess what happens? The Fed comes into the market again, prints a whole bunch of money with TARP, with TAUF, cash for clunkers, the stimulus package, your healthcare reform, just throws everything at the economy. And look, the deficit begins to shrink. It begins to shrink. And then look, guess what happens? We roll right back off of a cliff again. So guess what happens? We constantly see this where we get the business cycle. When people talk about the business cycle, it's a boom and then it's a bust. The boom is happening because the Fed is manipulating the markets. And then the bust happens when the Fed can't manipulate it anymore. The market realizes the emperor has no more clothes. And then guess what? The economy begins to contract. And now if you look at this right here, again, after 1971, when we delink from the gold standard, what do you begin to see with the public debt? It just does what? It just keeps going up and 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 up. I don't care if you are a Republican. I don't care if you are a Democrat. You cannot deny this. These are facts. This is the debt clock. We are in $23 trillion worth of debt. We are living in a bubble right now. Trump said it out of his mouth. I want to repeat this for you again. When he was campaigning, this is what he had to say.
Talk, no action, sounds good, doesn't work, never going to happen. Our country is suffering because people like Secretary Clinton have made such bad decisions in terms of our jobs and in terms of what's going on. Now, look, we have the worst revival of an economy since the Great Depression. And believe me, we're in a bubble right now. And the only thing that looks good is the stock market. But if you raise interest rates even a little bit, that's going to come crashing down. We are in a big, fat, ugly bubble. And we better be awfully careful. And we have a Fed that's doing political things. This Janet Yellen of the Fed is doing political by keeping the interest rates at this level.
So see, when he was on the campaign trail, September 26, 2016, he was all against the Fed and he was against low interest rates and he was against market manipulation. But now that he's the president, he's all for market manipulation and he's mad that the Fed is is trying to do tightening and rein in the money supply. And as I showed you right here, when you go to the repo rates, you can see the Fed is printing billions of dollars every day intervening into the market. That's not a healthy economy. That's not a thriving stock market when you have to constantly keep going into the market printing money. Now, I want to show you something because we're talking about income inequality and the Fed is the direct link to what's happening with income inequality. Because when you look at Timothy Geithner, Ben Bernanke, Jerome Powell, Hank Paulson, all of these people who are the chairman and the presidents at the Federal Reserve and at the Treasury Secretary, these are people who go from the private sector, from banks. They then come and work in the public sector. They deregulate the economy. They go out and they draw up all of this different legislation. And then after they get the inside scoop, they then leave government and go back to private corporations. I want you to look at income gains widely shared in early post-war decades, but not since then. This is extremely important because it goes back to the gold standard. Prior to 1970, I want you to see something. Look at how the 95th percentile, the median, and the 20th percentile, they're all lockstep going up, right? You can see income gains going up together gradually, a healthy economy, not the 1% getting rich. And then guess what happens? After 1970, when we delink from the gold standard, look what begins to happen. This is where the income starts to spread. Wow, look at this. The 95th percentile, they're breaking apart. What happened? Trickle-down economics, deregulation, and delinking from the gold standard. And it became a revolving door where corporations and government got into bed with each other. This has nothing to do with capitalism. This is cronyism. This is banks, multinational corporations, and governments colluding to deindustrialize the West. This is not about political party. I don't care if you are a Republican or a Democrat. You cannot deny what's happened once we delink from that gold standard. You see wealth explode for the top 95th percentile. I want to go down here again, and I want to read this paragraph to you. I know a lot of you don't like all the reading, but it's important. It says, let me put this link in the chat for you guys, because I know some of you may want to go later on and look at this. So let's paste it. Right? It says, income concentration has returned to 1920 levels. This is extremely important. It says, the Piketty says, I probably said the name wrong, data put the increase in concentration of income at the top of the distribution into a longer-term historical context. As Figure 3 shows, the top 1%'s share of income before transfers and taxes has been rising since the late 1970s. Remember, we're talking about delinking from the gold standard. And in the past decade has climbed to levels not seen since the 1920s. The vast majority of the increase occurred among the top 0.5% households. So now I want you to look at this. It says income concentration at the top has risen sharply since the 1970s. Look at this. Look at the top 1%, the top 0.5%. Look at the concentration of wealth. You can't deny this. This is not about being against business. This is not, and understand, I made a video when they had the Revolt Summit. And I broke down how, MAGA had nothing to do with racism, white nationalism. When Trump was trying to sell to middle-class workers was that he was going to bring back all of these jobs. The tax cuts were going to bring back the Reagan era. We were going to have this big boom. And that's what people voted for. He was going to fix a bunch of the trade deals with the TPP deal, the NAFTA deal, bring back a bunch of oil pipelines, and bring back the manufacturing sector. Well, we can say that for a fact now. There's no more debating or guessing. That's just not happening. That's just not happening. And now that's the next thing I want to get into. Okay? I want to give you a story because I believe in the power of stories. Right here from this, I like to put a face on things. And Terrence the Don Chef, thank you for the donation. I appreciate it. This is Jim Springer right here. It says, Jim Springer, Chief Financial Officer of Industrial Nut Corp in Sandusky, Ohio, doesn't need the Fed and a bunch of economists to tell him that manufacturing is in recession. He can see it in his 111-year-old family business making lock nuts and other fasteners. Springer, 58, who runs the company with his father and 3 brothers, remembers when orders took off at the end of 2016. Sales surged 30% in 2017 and went up an additional 14% last year to just shy of the company's record high sales of $20 million in 2006. It's been downhill since the first quarter, however, as the company's largest customers, such as Caterpillar Inc., the big manufacturer of tractors and construction trucks, started to scale back. Sales at the industrial nut are expected to fall about 10% this year, and Springer says tariffs are a big culprit. They've hurt the company both by making raw materials more expensive and slowing sales in China for companies such as Caterpillar, and those effects have trickled down to parts suppliers like industrial nut. The magnitude of the loss we're seeing from the tariffs far outweigh the benefits of tax cuts, Springer said, referring to the GOP-led move to shave the corporate tax rate from 21% from 35% starting in 2018. That was pro-business, and it was nice, he added, but the tariffs are just too blunt of an instrument. See, I want to put a face and a story behind what's happening. This is a small to mid-sized business. Even if you cut the tax rate for them, it doesn't benefit them because they're not multinational conglomerates like a Caterpillar, like an Amazon. So they can't absorb what's happening with the tariffs. So yes, you may cut tax rates, that's great, but it doesn't benefit the small to medium-sized business. Because again, like I said, we're in a manufacturing recession. When we have our government saying that we created 54,000 jobs, but the reality is 48,000 of those jobs are just GM workers coming back, and they're saying that that's success, then we know that our economy is not thriving at all. And I want to read this Bloomberg article to you as well. It says, stocks of manufacturers and other industrial companies within the S&P 500 index have risen more than 35% off a low set on Christmas Eve last year. So understand, these stocks have crashed. The manufacturing stocks, they're bottoming, right? They're coming off of the low. When recession fears reached a fever pitch, a downbeat round of earnings in the second quarter proved the manufacturing slowdown many feared was really happening. And the third quarter results largely showed the downturn accelerating, right? So this is important because we're looking at the ISM. Look at this chart. Trump comes into office. Everyone's optimistic. ISM is going up. That's great. Oh, this is beautiful, beautiful, beautiful. And then, boom, we fall off a cliff. Now, what happened around this time? We got the tax cuts. Remember, everyone was talking about these tax cuts. Oh, my God. When we cut taxes, you know what's going to happen? These companies are going to go out. They're going to hire more people. They're going to buy equipment. And the economy is going to boom. Well, let's look what happened. How FedEx cut its tax bill to $0. Right? Because we remember, trickle-down economics. Give these businesses tax cuts, and you know what they're going to do? They're going to hire people. Well, that didn't happen. Instead, what they did, they went out and did what is known as financial engineering. They went out and brought back their stock. Because the Fed has interest rates so low, bad companies are allowed to go and borrow and get into more debt. So now let's read this article. I highlighted some quick points. It says, in the 2017 fiscal year, FedEx owed more than $1.5 billion in taxes. The next year, it owed nothing. What changed was the Trump administration's tax cut for which the company had lobbied hard. Frederick Smith, who repeatedly took to the airwaves to champion the power of tax cuts. If you make the United States a better place to invest, there is no question in my mind that we will see a renaissance of capital investment, he said on an August 2017 radio show hosted by Larry Kudlow, who is now the chairman of the National Economic Council. Well, let's look what ended up happening. 4 months later, President Trump signed into law the $1.5 trillion tax cut that became his signature legislative achievement. FedEx reaped big savings, bringing its effective tax rate from 34% in fiscal year 2017 to less than 0 in fiscal year 2018, meaning that overall, the government technically owed FedEx. Think about that. Think about that. But listen to this last part. But it did not increase investment in new equipment and other assets in the fiscal year that followed, as Mr. Smith said businesses like his would. So remember, this is the most important part. They were supposed to go out and hire people. They were supposed to go out and invest back in the company. But instead, they got their tax rate down to effectively 0. Basically, the federal government ended up owing them money. And then now let's look and see what ended up happening. As for capital investments, the company spent less in 2018 fiscal year than it had projected in 2017 before the tax law was passed. It even spent less in 2019. So understand, remember, Frederick Smith said, if you cut our taxes, we'll hire more people. We'll invest in more people. Well, much of the savings have gone to reward shareholders. FedEx spent more than $2 billion on stock buybacks and dividend increases in the 2019 year, up from $1.6 billion in 2018 and more than double the amount the company spent on buybacks and dividends in 2017. So what does that mean? Trump gave them $1.5 trillion in tax cuts. They were supposed to hire people, pay people a better wage, invest into the pension plan, give you better health insurance. You know what they did? They brought back their stock, went out and took on more corporate debt because the Fed has interest rates low. And now Trump is running around saying our economy is good. Yeah, it's good for the 10%. It's good for the 1%. It's good for the stockholders, but it's not good for everyday Americans like you and I. It's not good for Americans like you and I. It's just not. It's extremely important. And again, I want to show you this chart. Look at this. Dividends and buybacks. Look at this. Again, during the bubble, buybacks, right? The red line is buybacks. The blue line is dividends. And then look what happens. Boom. Buybacks are far outpacing dividends. Why is that? Because companies, because they have the tax break, they can have more money now. And because the Fed is pumping so much liquidity into the banking sector, which they're then loaning out to wealthy people, guess what's happening? They're taking that money and they're using that money to buy back their company stock. That benefits executives. Now, some of you are going to say, oh, well, guess what? I have a 401k. Understand, you don't have a 401k, number one, until you sell. What does that mean? These executives, they're actually reaping the benefits today, right now, while the stock market's up. Who's to say that when you go to cash out, that number one, the stock market's going to be where it's at, and number two, and most importantly, are the gains in your retirement portfolio outpacing inflation? Because understand, the Fed is inflating. The problem with the CPI, the Consumer Price Index, is that it doesn't include major parts of healthcare. It doesn't include housing. These are two major expenses for you because you're going to need a place to live, right? We see housing is going through the roof if you live in major metropolitan cities. So just because the stock market's rising doesn't mean that your pension is going to benefit your pension or your 401k, because most pension plans are not properly funded. You don't have an adequate amount of money in there. And like I said before, you're just rich on paper. You don't have that money until you cash out. So that's very, very important. And the stock market can be up today and it can be down tomorrow. So you need to really understand that a rising stock market isn't beneficial to you. And I'm going to do a whole nother live stream breaking down the myth of pension plans and why many of you're not even contributing enough money to your pension plan to outpace inflation. But that's a whole nother video. Now, some of you are asking, what is a stock buyback? What are stock buybacks? So right here, let me copy this for you. And again, put this stuff in there so you can go and you can go and do your own due diligence on this. This is important stuff. It says stock buybacks, also known as share repurchases, refer to company purchases of stock from its existing shareholders. These shares are purchased at the market price, then returned to the treasury, thereby reducing the number of shares outstanding. Because there are fewer shares, earnings per shares go up. And because stock price is based on multiples of EPS, stock price typically goes up as well. So now, why is the stock market going up? I just proved to you. It's going up because these major corporations, they receive tax breaks. They then took those tax breaks and they brought back their stock. So our stock market isn't indicating a healthy economy. It's just not. And it's disingenuous to listen to our president say that. Now, here's another article. Paste. It says, this is in 2018. U.S. companies spent a record $1 trillion buying back their own stock this year. So rather than them investing in employees, they could have took that $1 trillion and paid you a livable wage. They could have took that $1 trillion and tried to give you a better health insurance plan. They could have took that $1 trillion and tried to fix our manufacturing base in this country. You know what they did? They took the $1 trillion and they brought stock. It says U.S. companies have spent $1 trillion this year on buying back their own stock, a record figure reached 3 weeks before year's end. That's according to Trim Tabs, an investment research firm. $1 trillion, a round number of epic proportions, is roughly equal to the amount U.S. consumers are expected to spend this holiday shopping season. It's also larger than the gross domestic product of 166 countries. So understand this. This stock market is not indicative. It does not indicate that we have a healthy economy. This is financial engineering. This is the Fed pumping funny money into the economy. This is the conservatives and Republicans slashing and cutting interest rates on the top 1%. And they're basically using it to suck out resources for themselves. Again, I don't care if you are a Republican or a Democrat. It's just the left wing and the right wing of the same bird. There is nothing different between the two parties. Because there, as we can see, when we look at the debt clock, you do not get to $23 trillion of a national debt. We've had Republican presidents. We've had Democrat presidents. I said it earlier. We had the first Bush. We had the second Bush. We have Trump. We had Clinton. We had Obama. And guess what? The debt continues to increase. The deficit continues to keep increasing. Wealth and wage inequality continues to keep spreading out of control. The top 1% continues to keep getting all of the benefits, and the trickle down that's supposed to happen, it's not happening the way that the conservative party says it's supposed to happen. Again, right here, we're looking at the deficits, and we can see this is the CBO, right? The CBO projects what the deficit's going to be over the next 10 years, 15 years. Well, right now, this is what's projected, what the deficit's projected to be. Don't you see that this is still growing? This is not healthy. And again, you can go and read this whole CBO report. And this is if everything goes to plan, as planned, right? This is not counting in another recession. This is not counting in if we go into a depression. You can see over and over again, we see this happening. The outlays, what has to go out versus the revenues, it's outpacing it every time. And there's 228 of you watching this. Please, guys, like this video or dislike this video. It helps the content rank in the search engines. If you're not subscribed to the channel, please subscribe to the channel and hit the notification bell as well. So let me copy this 1 second so you can go and look at this whole entire report. And this is important. And understand, the CBO is always wrong. They're always wrong. It's not like the CBO is correct, right? Like, because they didn't expect that to happen in 2008 and 2009. They didn't even see that happening, the Great Recession that we had. So understand, they've always been wrong. And I can see if it was just me saying this, but you have billionaires like Ray Dalio coming out and saying this, where he's saying why and how capitalism needs to be reformed. And this is a good, people like Jeremy Grantham are coming out and saying that there's a problem with this. And when you look at the presidential candidates right now that are running, none of them are really providing us any solution to fix our national debt. They're really talking about things that aren't really going to work. Just taxing the rich isn't going to fix our problems. We have to fix the way that government works, because there's a huge problem when you have, like I said, people like Timothy Geithner, Hank Paulson, Ben Bernanke, these people who they work at investment banks like Goldman Sachs, JP Morgan, Merrill Lynch, in the private sector, and then they come into the public sector and they pass legislation. They deregulate industries. They take apart things like Glass-Steagall, where now investment banks and regular commercial banks can merge. And then basically they suck out all of the resources. They get all of the gains. And then when the economy fails, they hold us hostage. And the same people who create the problem, they didn't come into government and fix the problem. And see, that's part of the problem. And those are the things that we need to fix. And as I said to you before, when you see your president out here talking about we're creating these jobs, and we know for a fact that that's not true, that's a problem. Like, again, I want to play this real quick.
Very low 50-year level. A couple of generations of people have not seen this kind of an unemployment rate. It continues to be that low. So where are the hiring? Where is the hiring? Look at manufacturing. That's almost entirely GM and a little bit more. All those people coming back from that GM strike. So that's pushing that number up. But across the...
You see how quickly she just glosses over that? That's deception. You can't say that we created 54,000 jobs when 48,000 of those jobs are just people coming back to work from a strike. And again, as I said before, you have the Brexit crowd, you have the Anthony Bryan Logans, you have the Candace Owens, the David Harris Jr.'s of the world going out and telling us that we just got to leave the Democrat plantation, and if we go vote for conservatives, Trump gonna bring back all these jobs. And we can see that's not happening. We know manufacturing's in a recession. We know that we're losing manufacturing jobs. We're not gaining on the net manufacturing jobs as we should be. We know that China is rising and China is coming to take our lunch. We know that. We also have an aging, older population where we have more people who are going to be entering into retirement with the boomer population. So we have a lot of big headwinds. And we have a financial elite in this country who are hell-bent on deindustrializing us. And we have a president who, when he was campaigning, he wanted to raise interest rates, but now when he's the president...
I did this despite a near record number of rate increases and quantitative tightening by the Federal Reserve since I won the election. 8 increases in total, which were, in my opinion, far too fast an increase and far too slow a decrease. Because remember, we are actively competing with nations.
So, this is not me being a Trump hater. As I said before, I'm not a conservative. I'm not a Republican, and I'm not a Democrat. I have conservative ideals. I have libertarian ideals. But the facts are the facts, and the data is just the data. We have a national debt that is out of control. We have a Federal Reserve that is manipulating the stock market. We have corporations that, rather than hiring people, paying them a decent wage, they'll rather pay out bonuses and they'll rather buy back their stock. These are things that you cannot deny. You cannot come on here and talk about, being a social justice warrior. As I said before, when we delinked from the gold standard in 1971, that allowed deficit spending to happen. That allowed us to go out onto a complete fiat currency and just inflate away. And we've seen that the dollar is just tremendously losing value year after year. And we've seen that the national debt has done nothing but explode. And you can't deny what's in your face. You cannot deny this. And we have smartphones today. You do not need to have a PhD in economics. You do not need to go to school for 10, 15, 20 years. You don't need to work at the Fed. We can go to the Federal Reserve Bank of St. Louis and just use their own data. And we can see from 1970 on, the federal debt, the public debt has done nothing but explode. You can go to this website on your phone and look at wage gains. You can look at GDP. You can look at trade deficits. I'll post it in the chat and you can go and do your research. But they want to keep you distracted. They want to keep you busy. And I want to flip this back around because I want to get ready to wrap this up. Thank you for the donation, Miss D. Great job. Keep up the good work. It's a multifaceted problem. Thank you so much. And there's 252 of you watching this. Please hit the like button, the subscribe button, and the notification bell. Now, these two books that you see flashing across the screen, 1984 and The Creature from Jekyll Island, these are books that you need to go and read. Or if you're cheap and you don't want to spend any money on books, the audiobook version, they're on YouTube. Literally, you can listen to the book for free. People have taken the time out and uploaded the audiobooks onto YouTube. Go and read this stuff or listen to this stuff. This is important stuff because as I just played that CNN clip for you, that's Orwellian. We truly live in a world where right is left and left is right. We live in the upside down. If you watch the show Stranger Things, they talk about like the whole upside down. The government and corporations are, they're in bed with each other. They're colluding against you. And then they come out here and they're basically championing as if that's good. That's not good when you have your president champion 54,000 manufacturing jobs when he knows that 48,000 of them are just workers coming back. That's not healthy. And then when you look at the Federal Reserve Act of 1913 and you see how the international bankers colluded together to get us off of the gold standard and seeing how they're sucking out all of this wealth from our country. And you can see, these major tech companies like Facebook trying to launch their own currency. That's a problem. Another show that you may want to watch is a show called Mr. Robot, and they talk about the evil corporation, E Corp. Art imitates reality, and you really need to go and watch that show because when you watch that show, you'll be blown away how they put it right here in your face. And I'm not trying to be conspiratorial. I'm not here to spread conspiracy theories. The Federal Reserve is not a part of the federal government. It is a private bank. And you have a sovereign nation in the United States borrowing money from a private bank. That's a problem. And there's really nothing you can do about it but get prepared. See, in 2007, 2006, 2005, people like Peter Schiff, Ron Paul, Rand Paul, Jim Rogers, Noria Rabini, they were coming on every news station you could think of and telling people, we are in a bubble. This is going to crash. And people laughed at them because when you're in the bubble, everybody's loving it. When the stock market's going up, everyone is happy. Everything is great. But as you can see, if the Fed has to keep going into the repo market and injecting $70+ billion every day, that means that the banks are having shortfalls. Liquidity can dry up like this. If you go and watch The Big Short, or if you go and you watch, I forgot what it was called. I think it was called Collapse. I forgot what the exact show was. But they were talking about Hank Paulson when he said, people are going to go to the ATM and money isn't going to come out. We were on the brink of a collapse in 2008. People don't understand that. And because we live in a first world country, we don't really know how that feels. But look at what's happening in Hong Kong right now, where the government is restricting how much money they can take out and clamping down on the protesters. You can wake up tomorrow and money won't come out that ATM machine. So I'm not saying this to scare you. I'm saying this to inform you. I don't care if you are a Republican or a Democrat. You need to be aware that we are in a bubble and that this is very dangerous. Now, how far and how long this can go, who knows? This can go for another 20 years, 15 years. We don't know. But when the bubble bursts, we've seen it in 2008. We've seen what it looks like. We've seen what it's like when the economy is losing 500,000 jobs a month. We've seen what it looked like when the credit markets freeze up. We've seen like what happens when these derivatives and these credit default swaps, when they begin to explode. We've seen this. So What you need to do is be informed. Don't overspend during the holidays. Put some money to the side, right? Have some cash in your home. Invest in precious metals. Put some money in the cryptocurrency. You don't have to put it in Bitcoin. Maybe you like Ethereum. Maybe you like Ripple. Maybe you're into Tether. Maybe you're into nulls. Who knows what it may be. Put it into real estate. Real estate's a good investment. It's something physical that you can touch. And real estate tends to, go up with inflation. So that may be a good thing for you to invest in. But you have to prepare yourself for what's coming. And especially us as black people, we don't really take a lot of time out to look into this type of stuff. And it's important to understand this. You don't need to have thousands of dollars. You just need to have an emergency fund on the side. Don't be banking heavily on your pension. Try to diversify if you can afford to do so. Have a plan for your family in case there's an emergency and you need to get out. Like, all of these things are important things that you need to be looking at. And again, this is just the introduction. I didn't really want to get too deep. We're going to go a lot deeper into what is the repo operations. We're going to get a lot deeper into what's happening with the Federal Reserve Act, the creature from Jekyll Island. We're going to get deeper into the cryptocurrency stuff. Thank you for the donation, Ezekiel Castleton. Talk that talk, fam. Thank you for the donation, Castle Dragon. And someone sent me a donation on PayPal while we was going. I just want to give you a shout out too. Thank you for the donation. Give me 1 second. Let me pull it up. Somebody sent me a donation as well. Thank you for the donation, Linda Humphrey. I appreciate it. Also, when we talk about starting businesses and stuff like this, you can see that even starting a business, as I broke down with the Lock Nuts company, people tell you go start a business, and then you start a business, and then a trade war breaks out, and your business isn't even profitable anymore. So that becomes a problem, right? So when people say, "Oh, black people, you just need to go and start a business," well, you go and start a Lock Nuts company, and then you go into a trade war, and you can't sell to the suppliers over in China. Well, guess what happens? Your business starts to struggle. So it's important that you don't just listen to things when people just tell you. And I'm not saying that all hope is down, because if you invest in things or you short the market, you can make a hell of a lot of money, like Michael Burry did during the collapse of 2008. So there's going to be opportunities. When something's going down, something's going up. Market's crashing, gold may be going up, silver may be going up. There's a lot of different things that you can invest in. So just be flexible in your thinking. Don't be one of these Brexit clowns and think that, everything's going good and Trump is our Lord and Savior, because we can see that the economy is not thriving the way that they're making it out to be. It's just not. And I haven't even touched on what's happening with the farmers. As I said before, I can make this stream 2 hours and pick apart all of the stuff that Trump's been saying. And as I said before, I understood what MAGA was about, what he was trying to do. But at a certain point, I have to stop listening to your rhetoric and actually judge you on what you're producing. And we can see his economy is not thriving. It's just more of the same. It's trickle-down economics. And we know, if you go back to, who was it again? I think I have it here. It was President Herbert Hoover, who did the stimulus package during the Great Depression. And it was Will Rogers who coined the term trickle-down economics. Ronald Reagan just reused it. And as I said, we can see what it's done to the economy, where it's only benefited the financial elites. So we have to, as people, we have to be more intelligent when we're making decisions and not be emotional and be biased. I like listening to this material than videos about Brother Polite. Also, the country of Cyprus had a banking crisis. Look at that as an example. Yeah, and look what's happened with Deutsche Bank and Alexander Wilson. Understand, Alexander Wilson, the reason why I make videos about people like Polite and Umar Johnson is that you have to understand, a lot of our people, they're into that type of content. See, if I just sat here and talked about economics all day long, I'll constantly just be preaching to the choir. Many of you are already in tune with this information. It's not like I'm preaching anything new to you. If you follow Yvette or you follow Tone, you know a lot of this stuff already. We have to try to reach the people who aren't into this stuff. See, this is the problem that we have as, you know, and I don't want to make this a black and white issue, but I have to just speak right now about like black people. We tend to get the smartest guy in the room complex where we're preaching to the choir. We have to go out and reach the people that follow the Hassan Campbells. We have to go out and try to find the people that follow the Nature Boys. See, those are the people that we need to wake up. If I sit here all day long and I make videos that you agree with, we're not reaching anyone new. So I get it. You may not want to hear those polite videos, and those may be videos that you just don't listen to. But that's how we're going to reach a new demographic of people. We have to be willing to go into the mud a little bit and get dirty to go clean some of our people up, right? Because a lot of our people, they like gossip. If I was talking about Umar Johnson right now, I'll have 600, 700, 1,000 people watching. If I was talking about Dame Dash, I would have 1,000 people watching. So understand it's a method to my madness of why I have to go there to then get people to bring them here. Because some of you would not even know who I am had you not watched my Umar video, had you not watched my Brother Polite video. So there's always a message or a method to my madness. And I know you may not get it, but I do. Golden Gate, thank you so much for the donation, a contribution to the Tequila Fund so that crypto presentation will be extra smooth. Keep up the good work. Also, guys, I do have some crypto videos, and let me just plug those videos right now. For some of you, I have a lot of different content on my channel. Let me show some of you guys now. Let's go here to my channel. Let me flip this around for you. As you can see, if you come to my channel, I have videos about business credit, right? I have videos about how you can help fix your credit. I have videos about how you can buy Bitcoin on exchanges like Coinbase. And trust me, as I said, we're going to get a lot more technical, much more technical. I've reached out to a few guys in the crypto space, big name guys, and we plan on doing some live streams in the future. Even setting up some debates in the crypto space. So I want to bring you guys along slowly and really build up. And as I said, when you donate and you support the content, it frees me up now where I can go and I can spend 3, 4, 5 hours in a day in research, because this stuff takes time to put together. You know, it's not easy stuff to do. So, you know, I appreciate you guys that support the content and support the channel and donate, because many of these videos, they're not getting monetized. That's just, you know, YouTube playing YouTube games. But I got videos about Robert Kiyosaki, videos about how to start your business and everything. So let's check the comment section a little bit. Let's see what's going on in the comments. And again, there's 246 watching. Please like the video or dislike. Also, please subscribe and hit the notification bell and share this video. Let's see what's going on here. Amen. Thanks. Do you believe that Putin and Trump are doing, I guess you would say, using this trade war to destroy the Federal Reserve System globally? Absolutely not. The Federal Reserve and many of these governments are in bed with each other. And when one country is slashing interest rates and going into negative rates, another one's trying to act like they're raising, but it's all a race to the bottom to get into a one world government. And I'm not trying to be conspiratorial. These are things that they've said out of their own mouth about having a one world government and one world currency. That's a fact. And that's what they're trying to do. They're trying to destroy nation states and destroy sovereign nations. And we see that happen time and time again. Anytime a country doesn't want to play along with the Fed, and they want to try to move away from the dollar, and they want to try to go to a gold standard, or they want to try to back their currency with oil, all of a sudden a war happens in their country and they become a terrorist. We've watched them do it with Gaddafi. We've seen them do it with Saddam Hussein. You know, like, I'm not making these things up. We've seen these things happen. So it's happening in our face. You have to be in tune. And this is why crypto is so important. And this is why investing in gold and silver is so important. And this is why just pooling your resources together and getting with like-minded people to try to combat what's happening, because the creature from Jekyll Island is real. Why even worry about those people? If they want this knowledge, they'll come. In the meantime, focus on the smart people. Yeah, I understand what you're saying, but you got to kind of balance it out. It's just my opinion. Tariq Nasheed is the great black hope. I mean, if you say so. I don't have anything negative or positive to say about that. I I just recently saw an article that said the gig economy contributes to the false job security rhetoric as well. There's no discussion on the quality of jobs they are creating. Absolutely. And I'm going to dive into that as well. I'm definitely going to dive into that as well, because a lot of those jobs are foreigners who come over here on work visas, and they're basically undercutting the job market and hiring these people at, very, very, very low market rates, where if they had to hire an American worker, they would have to pay them a much higher salary. Those that have eyes will see. Thank you for sharing your knowledge with the ones who don't know it all. Cool. No problem. Breaking Brown Yvette touched on this possible economic crisis. Yeah, Yvette and Tone do a great job. Although I may disagree with certain things that they say and do. I said before, time and time again, the most positive, the biggest benefit that the whole ADOS conversation is going to do, especially for black people, it's just going to focus us more on tangible information. Right? We're not going to sit around and listen to faceless people all day long who don't have any solutions. We're not going to sit around all day long and watch documentaries. We're going to actually start equipping ourselves and informing ourselves with the data so that we can participate in wealth transfers, so that we can participate in the political process, because you can't have business without economics. I mean, you can't have economics and business without politics. We're seeing that. FedEx, the Frederick Smith guy, did what? He lobbied government. So you have a businessman lobbying government to get tax breaks to then go buy back his stock, right? So that's private sector playing in bed with government. So when you listen to people like Boyce who say, oh, just go start a business, you're competing against people who have advantages that you don't even know about. So it's important for you to be in tune to what's really going on. Motley Fool said there has been a recession in every decade, but there wasn't one during this decade. It was very concerning to them. Of course it is, because the bubble is getting bigger. And you have to understand, now you have central banks all over the world inflating this bubble. So that's why. So end of the US dollar? Maybe, maybe not. It depends. Maybe we can combat this. Who knows? The coming recession would have already been underway if the Fed didn't lower rates to help Trump get elected, but it's coming. Be prepared. Absolutely. And that's the most important thing, as I said before. In 2007 and 6, when Peter Schiff and Ron Paul and Nouriel Roubini and Jim Rogers was talking about the coming recession, everybody was saying, oh, don't worry about it. It's never going to happen. The Fed has it, and then boom, it happened. So just be prepared. Quantitative easing in effect. Yeah, but corporations tell government what they want and they get it. Yeah, but what I'm saying is that you need to be informed of this, because if you think that you're just going to form LLC papers and that somehow because you have a little LLC or you have a C corporation that you're going to go out here and compete with FedEx, you're delusional, right? Like, that may benefit you as an individual starting a business, but we're talking about the collective. And when people are talking about the racial wealth gap and things of that nature, you have to be nuanced, right? It's not black or white. Some of us can do for self, not all of us. And we have to understand the difference. And people come on here sometimes, oh, you're flip-flopping. No. Data makes you have to understand there's different solutions for different people depending on where you fall in the economic food chain. And it's just important that you understand the difference between the two. Like right now, I'm about to do a video on this. I've been researching it. And I'm going to wrap up with this. You have Jay Morrison with the Tulsa Real Estate Fund, right? Jay Morrison creates the Tulsa Real Estate Fund. And he talks about how, we just got to do group economics and we have to work together. And by starting this, tier 1 crowd fund, the Tulsa Real Estate Marcus Garvey Back to Africa B1, we're going to go out here and we're going to fight gentrification. Well, here we are now a year later, and he can't even give his investors a return yet. And if you think a little measly $8 million fund, $15 million fund is going to stop gentrification, then you have some serious delusions of grandeur. And don't believe I'm going to get deep into that in the coming days. I'm just doing my research to get everything properly together. And this is not to attack Jay Morrison, but this is just letting you see, where black capital fails. $8 million is not stopping gentrification. $15 million is not stopping gentrification when you are competing against hedge funds that have $100 million, that have $200 million, that can go to the Fed and they can borrow at bear nothing interest rates. You're not stopping gentrification with $8 or $15 million. It's delusional. And we're seeing it doesn't work. It works for Jay. He's going to get his fees off the top, and there's nothing wrong with that. I'm not knocking him. You're a businessman. Make your money. But we're seeing the limitations of just starting a business. Right? So it's important for you to, actually understand this. Can you do for self? Yes. If you have the ability, should you do for self? Absolutely. I believe in doing for self. But many of us can't. And even those that are doing for self, we also need to understand there's limitations for doing for self as well. Right? Because I know $8 million, I'm not competing against SAC Capital. I'm not competing against Bridgewater Capital with $8 million. These guys have billions. Right? So we have to take a step back and understand that things are nuanced. You can do for self, but you also have to understand where the limitations are for doing for self. And that's different. I don't believe in just waiting for the government to give me a handout, because I don't believe they will ever give us a handout. But I'm just being nuanced in my thinking. And people look at that and say, well, that's flip-flopping. No, that's called being intelligent. That's called being intelligent. Right? That's called hoping for the best and preparing for the worst. I hope that my government will do right by me, but I also have to make sure that I'm prepared to do for myself in the event that my government won't do for me. And I also have to understand that while I'm doing for myself, there are limitations to how far I can go. There is a glass ceiling above you, and you just need to know that. It's not about trying to, put you down or anything like that. I believe in doing both. I believe in being politically engaged, and I believe in also doing for self. I believe in both. That's where I stand. And with that being said, we're going to leave it here. We're coming up on an hour and 16 minutes. I don't want to keep this stream too long. So again, guys, for everyone who donated today, thank you so much. It helps the content. It helps me be able to free up time to create better content for you. It helps me be able to reinvest into the channel with equipment and stuff like that. Excuse me. So with that being said, guys, please like the video, share the video, subscribe to the channel if you're not subscribed, hit the notification bell so that you can be notified when I go live in the future. If you want to follow me on my other platforms, I have my CashApp below. I also have my PayPal if you want to support, and also my other social media links is in the description below. And I'll probably go live again tomorrow if I can just get some more information about the whole Tulsa thing. Is what I'm doing right now. So have a great night, and again, thank you guys for tuning in and viewing the content.